Bank of England base rate reaction. So on Thursday the 7th of November, the Bank of England decided to reduce rates by 0.25% from 5% to 4.75%. I think this is fantastic news because no doubt mortgage lenders will also reduce their rates. Now, we did have something what's known as swap rates increasing a little bit, but with the reduction in the Bank of England base rate, that's definitely going to see rates reduce, and I would like to think that the lenders will reduce their rates beyond the 0.25% that has been reduced. When they purchase their mortgage funds, the mortgage lenders, from the money markets and from each other, they purchase them off the back of what I've said was called swap rates. And swap rates are really an estimate at what's going to happen to mortgage rates in the future. Now, we do have information from the Bank of England that rates should be decreasing furthermore, hopefully within the near future. So another 0.25% reduction I think would be fantastic. I don't think we'll see that until next year, 2025. But the way things are going so far, hopefully it could be sooner. That will mean that borrowing money, especially for yourselves, first-time buyers, will become cheaper, which in theory means you can either afford a property which maybe you couldn't have done before, or you can get that, upgrade to that next one which was out of reach before. Now, things to be aware of is that sellers could put prices up, or not sellers, the housing market, property prices could increase. There's normally a lag between rates going down and property prices increasing. So if you've been on the fence thinking about buying your first home or waiting to see what happened to rates, I would say get cracking now. It will take you around 3 or 4 months to get to the end of that process, and if rates go down again during that period, then you can take advantage of the further rate reductions. Bear in mind that stamp duty thresholds reduce in April 2025. They're currently up to £425,000 as a first-time buyer with no stamp duty. That reduces to £300,000, and then you have a tiered system where anything over that will be charged at a certain percentage. Other news recently is obviously we've had the autumn budget, which doesn't look great for stamp duty. Obviously, if you're buying investment properties, which increased, and right to buy discounts have been reduced drastically. And obviously we had Donald Trump, who yesterday won the election in America, and I have seen that there was bond rates increase in America, which sometimes can have a knock-on effect to the UK. Not all the time. The borrowing doesn't come from America as much from these UK banks like it used to in the past. So we're yet to see how that scenario could affect the UK mortgage and housing market. I would say overall, 2025 is looking like a healthy year for first-time buyers. Obviously, the stamp duty is a bit of a disappointment, but rates coming down and hopefully will reduce furthermore will mean you can certainly borrow higher amount on the mortgage side, and lenders now, more lenders coming in with up to 5.5 times borrowing, and nationwide with 6 times, and reducing the amount you need to earn to 30,000 means that over the last year or so, where the cost of living and inflation and everything has gone out of control, that is an attempt to bridge that gap so we can still get on that property ladder. Mortgage warning. As a mortgage is secured against your home, it could be repossessed if you do not keep up the mortgage repayments. So thanks for watching today's edition of First Time Buyer News. Please let me know your thoughts, how you think the latest updates will affect your situation. I'd love to know. Let me know in the comments, and I'll see you in the next one.